Well, it is Wednesday, and that means we've got the latest in the ethanol report as far as production and usage. The corn market watches this very, very closely, so this is very important information. Marlon Bowling just handed this to me. 841,000 barrels produced. That was an increase of 4,000 barrels per day. Now, albeit it wasn't as big of an increase as what we've seen over the last 2 to 3 weeks, but still an increase in production and a decrease in stocks. The ethanol stocks were at 21.3 million. That was actually down 500,000. The 4-week average is also higher. It is at 792,000. That's up 45,000. We did not have any imports. That is unchanged. Has that done much for the corn market? Well, we started out with about a 2-cent lower trend here this morning over in the corn. Now we're 3 lower on the July, 326. We are 0.5 penny away from the bottom of the range. December down 2.5 at 340 cents. Now on to the soybean market here this morning. We're down 0.5 penny on the July contract. November is down 0.75 cents. Soybean meal is down 80 cents a ton at 287.10. And the soybean oil market here this morning is up 8 cents at 28.07. We've got harvest pressure over in the wheat market with July down 8 cents in Chicago at 4.88. Leaves us 0.75 cents away from the bottom end of that range. July Kansas City wheat trading close to the bottom here as well, within a penny. In fact, down 6.5 cents on our live and instant quotes from bar chart. Minneapolis wheat for July is down 2 cents at 5.13. Cotton market this morning, it's up 65 points at 60.72 cents per pound. And the canola market is down 30 cents at 4.73 even. Let's talk to Todd Horwitz. He is with Bubba Trading in Chicago, or Redwood, Illinois, in fact, to be a little more specific. Todd, earlier in the day, you wrote something about all of the wild swings that we've been seeing in these outside markets. And the reason I mention this is because sometimes we can see some of that fund money funnel back to what's going on in the commodities. Now, take corn, for instance. We are short by 300,000 contracts, a lot of shorts in that particular market. Is there any indication, and I know that you've said many times that you're still very hopeful for what goes on in the ag commodities, that at some point we'll continue to see a lift? You know, we've got 0.25 penny away from a high yesterday, or at least breaking through some support here, or resistance. So are you still optimistic here today, even though that these outside markets are just kind of waffling and vacillating?
Actually, John, good morning. I'm actually more positive now. You know, I've seen some of the reports, and what we're seeing here is the funds keep trying to get short and keep trying to push down because these markets are so illiquid, but the commercials are long and they're still buying. And I would venture to say that when the commercials really decide to make a commitment to step in here, the funds are going to get it stuck, you know, where the sun doesn't shine, and there's going to be a big short covering rally, which should break these out of these range finally. And I think that is a very interesting angle that's going on right now in the grain markets across the board. The only grain that I see has problems is wheat. It looks like it may be breaking down, but I mean, corn and beans are very heavily shorted by the funds, and the commercials are heavily long and looking to get longer. So I think it's going to create a much bigger move than anybody expects. And, of course, if it comes out of these illiquid conditions, it'll even be bigger because of the lack of resistance against it.
Todd, is there a particular trigger that you're looking for that would trigger all of this shift to more money back into the commodities?
Well, yeah, I think corn has to get above and hold over, you know, let's say 330 or so, 333, somewhere in that neighborhood would be a key trigger. And if we're looking at July, or if we want to go out and look at, you know, December, you know, we'd probably be looking at, you know, let's say 344, 345, around there. And I think that if you get through there, I think you're then off to the races. But obviously it's been a challenge to break above those levels, as we've seen day after day. Every time we've tried, we failed, but we keep making higher lows, which is very encouraging from that perspective.
Okay, Todd, thanks a lot. We'll talk to you again very soon. And we're going to come back in just a moment and get everybody up to date on the latest in the livestock numbers. That's straight ahead here on the Market Day Report.